Hello, everyone. I hope everyone is having a great day today. Right now, the portfolio is up 0.82%, $198.45. So we can quickly see at the bottom, VTI paid a dividend of 55 cents per share, which is much lower than the dividend that I got last time. I think I got around some $38, but the portfolio was created $27.36, so that's pretty good to see there. Let's look at my all-time chart. I think a lot of people are probably curious what my all-time charts are, what they actually look like. So let's get to it. So we can take a look at the all-time chart, and right now it is up $2,000 for 8% gain. Not too bad. That's actually pretty good. You guys know I like the high dividend paying stocks, and we have a lot to talk about, guys. There's been a lot of movement in the portfolio once again, and I want to quickly talk about some topics. I'm going to talk about composure in the market. Right now, this market is at all-time highs, guys. I was looking at the market the other day, and I'm like, man, it's really, really hard to find valuation in this market or a good buy in terms of valuation in this market because everything is reaching all-time highs. You know, all the techs are up, all the consumer staples that I like, they're up. Just so many stocks are up right now, and sometimes we get a little, I would say, we try to buy things that are not on sale, and that's what I found myself doing. That I found myself buying Waste Management at all-time highs, and as much as I like that stock, it is not a buy right now because in terms of valuation, I like to buy stuff that's on sale. So sometimes we get a little way ahead of ourselves. We push that buy button, and then we quickly realize, this is not what I should be doing. I should be, if I'm going to buy a company that's at all-time highs, I don't think it probably would not be Waste Management. I should probably buy a better company in that regard. And that's not saying that Waste Management is not a better company, but it's one of the better companies on the market. But there's certainly other things out there to consider if you're going to buy at all-time highs. So that was one of the things I want to talk to. A composure in the market. Don't buy at all-time highs. Wait for the dip. And there are some things that are on sale, but not everything's on sale. The market is really pricey right now. The next thing I want to talk about, and I'll just quickly go over this because I do want to go over this portfolio rebalance. So even though you guys can see at the bottom, VTI paid a dividend of 55 cents per share, I have rebalanced this portfolio, guys. I've rebalanced everything in terms of portfolio diversification because not just looking at the sector, but looking at the percentage allocated with my equity. And, looking at VTI, the equity was quite large. I think I had about some 30% of my portfolio in VTI. And that always seemed to bother me. It always seemed to bother me that VTI was going through, it had this much equity in terms of ETF. Now, I would like to have my equity in a ETF like that, such as VTI, because it's just so diversified. But I got to rebalance this portfolio. I had to rebalance some things, and you will quickly see what happened. Did I sell all of VTI? That's a good question that I think everybody wants to know. But there has been a lot of rebalancing in this portfolio. But I felt like I had too much stake in VTI, and we'll actually see if I sold off all my shares. But let's take a look at. I'm just looking at my notes here. So I did talk about the being composure in the market, and I did rebalance my portfolio. There's a level 2 market data or something like that. I'm not really sure. The Robinhood Gold just announced that they have level 2 market data, so that's really interesting to me, and I might just go and do that. But let's get into the portfolio. Enough talking, enough waiting around. Let's go look at Apple, 199. Position 10 shares, really, really up big on Apple, 10%, 195. So my average cost is pretty decent. I would like for it to go lower, but not a company right now that I would not buy here. Obviously, Apple is really pricey right now at that $200 mark, but good company. I love these giant companies with $1 trillion market cap. They do a lot of things such as make cell phones, computers, and I really like Apple in terms of its increasing dividends. It has a good foundation of just the consumer base with the iPhones, and I just like the stock, guys. I do like the stock. I'm up pretty big on them, so let's take a look at 3M here, 173. It's starting to bounce back. I'm up $83, 5% gain. Average cost 165. I got them on sale just for the 5%, 3.5% dividend yield. But they actually went lower than that. I think 3M went all the way down to 160, was my original buying point for this company. So had I just waited it out and just waited for the stock to go down to 160, I would be looking really, really good right now at 3M. And I definitely thought that 3M would, a lot of investors would buy back into 3M once it hit 160, $160. But again, you guys take a look at my position, 10 shares, 165. I'm sitting on a 3.5% dividend yield, $82. So this was a pretty good buy, and that's the reason why I bought them. Johnson Johnson 141. This was not really a good purchase, but like I said, I like the companies that are blue chip, dividend kings, dividend aristocrats, huge market cap. They do a lot of things. Guys, I always call this the Amazon of healthcare. Dividend yield still pretty good, $25, 1%, a little bit high, but Johnson & Johnson locks down the healthcare sector along with Pfizer, 43.66, and I'm really, really up on Pfizer, up 9%, $188, average cost $39.89. Portfolio diversity. So I'm talking about this portfolio diversity before earlier in the video, and portfolio diversity 8%. So I like to be around that 8%, sort of like 10%, and if it's like an ETF, then maybe around 20%. VTI 30%. That is just way too much, guys. So we can see 8%, 3M 7%, Johnson & Johnson 5%, and Pfizer, I think this is around 9% or so. So I have companies that have not really reached that 10% mark yet, and it seems like everything is decently spread out. There's some good diversification. I'm in a lot of sectors, just even along with Apple, 3M, Johnson & Johnson, and Pfizer. That's like 3 sectors right there, and they're really just a lockdown on that healthcare sector with Johnson & Johnson and Pfizer. So we'll take a look at Enbridge now. Enbridge, 50 shares, 34.50. Our portfolio diversity 7%. So you guys can see that I've really sort of managed the portfolio. I'm getting things in order. The portfolio diversity is not hitting over 10% or so. There are a few companies that are over 10%, but I'm going to quickly talk about why I did that. $52. Dividend yield pretty high on them. Just a good company. This company is still a pretty good, decent buy. They did not have a good month, and that's the reason why I took a hard look at them again. Very diversified within that oil industry. Canadian. It's a Canadian stock that has the potential to get that oil and energy sector up. So Enbridge pays a pretty good dividend. They're on sale, and this is what I do, guys. This is what I do. I buy stocks when they are on sale, and even though as much as I like the stock, and I get a little tempted sometimes to buy these waste management stocks like Waste Management, stocks like the Microsofts of the world at all-time highs, but in reality, I'm a dividend hunter. I try to look for companies that are beaten down, bullied, and people selling off, and this is the reason why I like to buy low and sell high. So let's take a look at AT&T, 100 shares. So what happened with AT&T? So this portfolio diversity is actually 13%. It's quite high, but it's over 10%, which, I said that there were going to be some companies that would have a portfolio diversification over 10%, but I'm perfectly fine with AT&T being over 13% because a huge company. Again, I love the big companies. I love the giant market caps that they have, like some $250 billion. The debt is concerning, but the dividend yield is still safe, I believe, with a company like this. 100 shares. I had AT&T before. I sold off AT&T around $32, and then I don't know what made me buy back then. I was talking to a friend of mine, and I was discussing with him about AT&T, and I'm like, this company's still a pretty good buy even at these levels. I know they went up a little bit, but for the past 5 years, still not doing very good. And if you have a long-term mindset, then I need to get back into AT&T here. I'm actually down $12 with the company, but all the things that they do, this is what I consider, guys. All the things that they do, they have the streaming services. I know Disney's been buying them up, but everybody has a cell phone. Everybody needs a provider and all this sort of stuff. And AT&T, I know it looks pretty bearish right now, but the company does still pay a pretty good dividend, and I still think that's safe. And 100 shares would give me $50 every quarterly payouts. So I started thinking to myself, why in the world did I sell AT&T? And I think there was someone in a previous video, they even asked, they said, what's the point of selling AT&T? This is a good company. I know the debt is concerning, but buy back in. There's still time to buy back in. 32.55, and the company is sort of trending around that resistance. This is definitely the resistance level. If it breaks past $33, I definitely think AT&T is going to continue to go up around $35 or so. But $32, 100 shares. This is where I need to just hold it out, see what's going to happen, see how the Time Warner deal is going to fold out, and if I do lose money, I'll be sitting on a pretty good dividend yield. I'll still get paid the $50, and everything will still be fine. So the company's not going anywhere. Huge market cap. This is the buy that I love to do. I love to buy companies like this that are still on sale and still time to buy. Excuse me. Let's take a look at Amazon here. Amazon. $1,914. Let's take a look at my position here. This is a company that I just bought in. It really doesn't matter. And I've always said this, it doesn't matter where you buy Amazon. This is definitely a long-term hold. It's the only stock in the portfolio that does not pay a dividend yield, but the portfolio diversity looks pretty good, just under that 10% or so, $48, 2%. I bought it recently, so I'm not going to be up tremendously high or anything else like that. But Amazon keeps the portfolio in order, guys. It keeps the portfolio in order. It keeps the growth aspects of the portfolio sort of just in line. And I just know that Amazon is a good company that will be a pretty good holding in the next 5 years. So definitely will probably be past that $2,000 mark. And this is a company that I feel like every portfolio would enjoy. It's just like I said about waste management in the previous video. But if I had to buy a company at any pricing point, it will be an Amazon, basically. If I had to choose between waste management and Amazon, and if you ask me, which company I'm going to buy, probably be Amazon at any price, because this company is just absolutely insane. They're monopolizing everything, and it's just absolutely ridiculous. So let's take a look at Disney. So you guys can tell the waste management is gone. I've said that in the beginning of the video, that how if I'm going to buy a stock that's overvalued, if I'm going to chase the market, if I'm going to chase a stock, it needs to be a stock that's like the highest end of the blue chips of blue chips. It needs to be a stock that does a lot. It needs to be a stock that, debt concerns are not really existent. I understand that companies go through debt, but they need to be a stock like a Disney that has movies, that they are buying up all the streaming services. They're having their own streaming service come out. Mickey Mouse and all this other stuff that they do. All entertainment, discretionary entertainment. They're pretty much the leaders of that of sector. And I know Netflix has a lot to say about that, but Disney. I agree. I agree with with all the Wall Street guys when they're talking about, hey, Disney is worth $75 in a market like this. I still think it's time to buy. If I had to buy an overvalued stock, if somebody sat down and say waste management or Disney, this is where I put money in Disney. 10 shares, average cost $139.58, up $21. Portfolio diversity 5%. I still think that's pretty good for a company like Disney. I definitely want to buy some more Disney, but I don't want to get too crazy like this. I talked about it earlier in the video, keeping your composure. 139 is still high. I think it got all the way up to 143. That's the 52-week high. So I'm not far off from the 52-week high. Keep your composure. Wait for if the stock dips to 130, buy some more. Easy. Let's take a look at VTI, and I hinted around about this in the earlier in the video. 150 right now. Average cost 121, but 25 shares of VTI. So this is what I was talking about, guys. 25 shares of VTI was sold. The market got really high, and I took the money off the table. I'm not happy how I'm going to get taxed on that money, but I am happy that I was able to get that portfolio diversity down to around 50% or so. So total return $717 now, 23% gain. It's still a good ETF. It's still a good ETF to hold. I know the dividend yield. Let's take a look at the dividends right quick. Guys, you can see I saw it at $148.99. dividend yield was paid. I got paid for 50 shares because that's when I was holding when the dividend yield was paid out. Total amount 27.36. But if we look right here, I got paid $38.60. So I got paid 77 cents. That's the thing with these ETFs. You don't know what dividend you're gonna get. One payout month will be 77 cents, and the other one will be like 53 cents. And I sat there one day, and I'm like, I don't know what I'm getting. I don't know what I'm getting in terms of my dividends. I know it'll be high. I know it'll be around like $38 to $40 or so. But this is an opportunity for me to sort of trim this portfolio diversity down. It was 30% of my portfolio, which is a huge allocation of my portfolio. I need to spread the money around, get into a stock like Enbridge that will pay me the same dividend. It's going to pay like $23 quarterly. But the thing with Enbridge is that I know I'm going to get that $23 quarterly unless they cut the dividend yield, which I hardly doubt they will. But I'm not saying it can't happen, but it's certainly looking at the fundamentals of the company, I don't think they're going to cut it. In fact, they've been raising the dividend yield. Enbridge has been raising their dividend yield. That's the reason why I've been taking a look at them, a hard look at them lately. Canadian energy stock that gives the portfolio some diversification. So VTI 25 shares. A lot of people might say, you should have just held out just a little bit more longer. Right now it's at 150, so I definitely should have held out a little longer. But you got to buy low and you got to sell high, and you got to look for deals. And I didn't sell all of my VTI. I'm quite happy with the portfolio diversity, around 15% or so with the 25 shares, and I'm still making bank with this stock. I'm up 23% still with the stock. So. And let's take a look at PowerShares, S&P 500 high dividend ETF. Now, this is an ETF I did not sell, and I'm up 10% on them again with $396, and that's quite a high equity on $4,000, $254. Portfolio diversity around 17%, but I'm okay with that because I like this ETF, and I need this ETF to compound invest the monthly dividend yield because that compound interest is definitely gaining here. Let's take a look at the dividend yield. Not a dividend announced yet for SPHD, but you guys know that this company does pay monthly dividends, and I'm definitely going to get a dividend from them. I don't know how much it's going to be, but this one thing I do like about this ETF is that this ETF does pay like that $14-15 dividend, and they don't really like decrease the dividend all that much. I haven't seen any decreases at all as far as like the history of paying out this dividend. But this is one of my favorite ETFs in the market. A lot of YouTubers seem to like this ETF, and it just keeps going up and up. And I'm compound investing, and I'm getting that high dividend yield. Not much to say about them. So. That's it for the portfolio, guys. I really do like the changes from this portfolio. Now it's 10 stocks inside the portfolio. Waste Management's gone. I switched them out for Disney because, again, if I had to buy a company that was overvalued or a company that I had to chase, it would be Disney. They just do so many things. And the one thing I want to say about Disney is this is not the first time I bought them. Like I always seem to buy Disney, and then I'll sell it, and then I'll buy it again, and then I'll sell it. Buy, sell, buy, sell. We got to stop that. I gotta look at this average cost. Yeah, it's high, 139, but this is a good company. This company's not going anywhere. Stop buying, stop selling. Just buy Disney and check back in, I don't know, a year or so and see where it's at. Maybe it will reach 175, but I started asking myself, why am I selling Disney? I know the first time I did it, I had to put some more money into another stock, but I gotta hold this. I got to hold this. And I know it just seems like I'm ranting off and, ranting about all my companies and how I need to hold. But, guys, I tried to make the video quick here. I have 10 companies, some really good companies in portfolio. Just to break the portfolio down, techs here. I have 2 Dividend Kings and 3M and Johnson & Johnson. I locked down the healthcare industry with Johnson & Johnson and Pfizer. There's a Canadian energy stock in here, gives me some portfolio diversification outside the U.S. And energy, gas, and oil is a commodity that everybody uses. AT&T, everybody has a cell phone. Telecommunications not going anywhere. Big company, pays a pretty good dividend risk crap, blah, blah, blah. The portfolio needed some growth aspects. The growth aspects were a little bit concerning with the portfolio, so I put Amazon in there. It doesn't pay a dividend, but you can buy it anywhere and just hold it for the next 2 years. It might go up to like 2,500. I don't know. Disney's here to as a giant company, discretionary company that is buying up all the streaming services, and just rounding out the portfolio with some ETFs that I sort of just trimmed back. I know I trimmed back VTI here, but definitely get that portfolio diversity down 15%. I had 30% of the portfolio, which is a huge chunk of the portfolio, but and it's still an ETF at the end of the day. It's still very diversified, but I'm already diversified with Apple and all this other diversification amongst single stocks. And don't forget, I have the M1 Finance portfolio. So that's it, guys. $24,502. Almost another $500, and I'll be at $2,500, which will open up free day trades. So I actually forgot about that. $25,000 will get you free day trades, and you won't have to worry about the regulations. You can day trade as much as you want. And the portfolio is skyrocketing here. I'm up 8%, almost closer to 9% all time. So that's going to do it for the portfolio. It's going to do it for the video, guys. I hope you enjoyed it. Comment, rate, whatever. And that's it. I'll see you guys next time.